Good evening, and welcome to the Crypto Overnighter. I'm Nicodemus, and I will be your host as we take a look at the latest cryptocurrency news and analysis. So sit back, relax, and let's get started. And remember, none of this is financial advice. And it's 10 p.m. Pacific on Sunday, August 6th, 2023. Welcome back to the Crypto Overnighter, where we have no sponsors, no hidden agenda, and no BS. But we do have the news, so let's talk about that. In tonight's episode, we'll delve into Russia's bold moves with digital currencies, including their homegrown digital ruble. Tether's new software initiative for Bitcoin mining raises eyebrows, while the BRICS nations eye a potential digital currency amid shifts in global finance. The New York Attorney General takes a closer look at Genesis, Alchemix pulls off a stunning recovery of stolen funds, and finally we'll explore the stance of U.S. presidential candidates on central bank digital currencies. And now for our first story for tonight. From the cold expanses of Russia, we've got a development that's heating up the world of digital currencies. The Russian government made a significant move in the world of digital currencies. They legally recognized digital currencies issued by other nations. This change in legislation coincides with the adoption of a dedicated law regulating the introduction of Russia's own digital ruble. Russian authorities granted digital currencies of other states a similar status to that of the digital ruble. This recognition of other central bank digital currencies, such as China's digital yuan, has gone through amendments to Russia's federal law entitled On Currency Regulation and Currency Control. The updated law that went into effect on August 1st now includes in the definition of foreign currency the text issued in digital form by national central bank of a foreign state. According to this revised legislation, non-residents will not be restricted from carrying out transactions with such digital currencies. This move by Russia is a significant development in the global financial landscape. It shows a willingness to adapt and evolve with the changing times. The recognition of other nations' digital currencies could potentially open up new avenues for international trade and cooperation. And we're going to be talking about one international bloc that will be very interested in this law here in a bit. The digital ruble legislation creates the legal basis for the introduction of the Bank of Russia's digital currency. Russian banks participating in the CBDC pilot are expected to start testing transactions with real users as early as this month. However, the digital ruble has yet to win wider recognition from Russia's private sector. A recent poll of over 1,200 representatives of small and medium enterprises revealed that almost two-thirds of Russian companies don't see any advantages of the CBDC for their businesses. This is a reminder of the challenges that lie ahead for central banks standing up their own currencies. The lack of enthusiasm for Russia's private sector shows the Bank of Russia still has a lot of work to be done in terms of educating businesses about the supposed benefits of CBDCs. Now, as we shift gears from the world of CBDCs, we turn our attention to a name that needs no introduction in the crypto world. It's time to take a closer look at the tech boost that Tether is bringing to Bitcoin mining. But before we do, make sure you hit that like button and help spread the show to new listeners. Tether introduced new software aimed at improving the efficiency of Bitcoin mining. Tether's team developed the software. It includes innovative JavaScript libraries designed to facilitate the transmission of commands and signals to Bitcoin mining hardware. This includes popular mining hardware such as WhatsMiner, Avalon Miner, and Antminer. The software's primary goal is to enhance the management of mining capacity, leading to more effective operations. Paulo Arduino, the Chief Technology Officer of Bitfinex and Tether, has been a core contributor to this project. He has been directly involved in coding the core architecture of Moira, an orchestration instrument for mining farms. This new software is built using hole punch technology, which is designed to improve the communication among components within the Bitcoin mining ecosystem. Each miner will have a unique public-private key, enabling encrypted and secure data streaming and command reception. This approach simplifies firewall configuration, enhances resilience to failures, and allows easy replication across sites. This development is a significant step forward for Tether and the broader cryptocurrency mining sector. The introduction of this software could lead to more efficient and effective mining operations, which could have a positive impact on the overall Bitcoin network. Tether's commitment to improving the mining process, despite facing legal challenges and regulatory actions, speaks to the company's dedication to the cryptocurrency industry. This development could potentially lead to increased trust and confidence in Tether, particularly among miners and other industry stakeholders. From innovative tech boosts to global financial shifts, the crypto landscape is evolving at an incredible pace. The BRICS nations are making their own move. The recent downgrade of the United States credit rating by the American rating agency Fitch has sparked a new conversation. From AAA to AA+, This downgrade may embolden proponents of a BRICS currency. Riley Adams is a personal finance expert, and while he voiced this sentiment, he also highlights certain geopolitical issues that must be overcome before this becomes reality. Fitch's downgrade is tied to repeated political standoffs over the debt limit. Those standoffs are eroding confidence in the U.S. fiscal management. This could rally support for a BRICS currency among those opposed to the U.S. dollar's reserve currency status. Then we have Rubinder Sachdev. He's the president of a New Delhi-based think tank. He believes that World War III has already begun. He anticipates the BRIC economic bloc will be merging with the Shanghai Cooperation Organization. A single merged organization, he argues, will be much clearer and stronger. Both BRICS and SCO, initially founded by China and Russia, share many big-picture goals. He sees the potential for BRICS to play an important role in building the new world matrix of the 21st century. That is, if they work together on a common agenda. The downgrade of the U.S. credit rating and the potential merging of BRICS and SCO are significant events. They could potentially reshape the global landscape and the role of cryptocurrency within it. The downgrade could weaken the U.S. dollar status as the world's reserve currency, opening the door for alternatives. A BRICS currency could be one such alternative, especially if the BRICS nations can overcome geopolitical issues and work together. The potential merging of BRICS and SCO could also create a powerful economic bloc that could challenge the U.S.-dominated financial system. This could create new opportunities for cryptocurrencies, as these nations may be more open to digital currencies as an alternative to the U.S. dollar. These developments could be seen as a positive for the crypto market. A weakening U.S. dollar and the rise of alternative economic blocs could drive more interest and investment into cryptocurrencies. This could potentially lead to increased adoption and higher prices. However, it's also important to remember that these developments could also bring new regulatory challenges and uncertainties. Moving on from international economics to the scrutinizing eyes of New York's Attorney General, let's explore what's happening with Genesis. Remember to hit that subscribe button and turn on notifications to stay updated on these stories. Digital Currency Group is under investigation in New York. The focus is on financial transactions involving its subsidiary, Genesis Global Capital. New York Attorney General Letitia James is conducting the investigation. Federal prosecutors and the U.S. Securities Exchange Commission are also involved. They're seeking interviews with potential witnesses associated with both Genesis and DCG. The investigation examines loans and other transactions performed between these companies. DCG revealed last year that it received around $575 million in loans from Genesis. Officials are also looking at a letter to shareholders from DCG's founder and CEO, Barry Silbert. In that letter, Silbert mentioned a $1.1 billion promissory note. He stated that this resulted from DCG assuming liabilities from Genesis connected to the collapse of the hedge fund Three Arrows Capital. The promissory note and how it was disclosed to investors have been a focal point of the operation. Genesis filed for Chapter 11 bankruptcy in January. This followed months of liquidity issues amid the bear market and the collapse of notable crypto firms, including 3AC and FTX. At the time, the company's filing estimated liabilities of $1 billion to $10 billion and assets in the same range. Genesis is the largest unsecured creditor of FTX and its affiliates, with $226 million owed. The companies recently reached an agreement to settle the dispute. DCG's venture capital portfolio includes Grayscale, Genesis, and CoinDesk, and some 200 other crypto-related companies. It also has equity in other companies, including the crypto exchange Luno and the advisory firm Foundry. This investigation into DCG and Genesis is a clear indication of the increasing scrutiny of crypto firms by regulatory bodies. It's a reminder that the crypto industry is not immune to the laws and regulations that govern traditional financial institutions. So, in that way, this could be seen as a step toward greater transparency and accountability in the crypto space, which could ultimately lead to increased trust and adoption. However, it also raises concerns about the potential for overregulation, which could stifle innovation and growth in the industry. While some in the industry face legal challenges, others are celebrating victories. Alchemix has made a stunning recovery of stolen funds. Let's see how they pulled it off. Lending platform Alchemix recently announced the return of all stolen funds by the Curve Finance hacker. The attack took place on July 30th and resulted in over $61 million in cryptocurrencies drained. The hacker targeted stable pools on Curve Finance using vulnerable versions of the Viper programming language through re-entry attacks. The return of funds started after the hacker accepted a bug bounty offer. Curve, Metronome, and Alchemix jointly announced an initiative to recover stolen funds on August 3rd. They offered a 10% bounty of the seized funds as a reward, They urged those responsible for the exploit to return the remaining 90%. This would bring the bounty close to $7 million. As we covered last night, in less than 24 hours after the offer, the original attacker began returning the stolen funds. They initially sent back 4,820.55 Alchemix ETH. That was sent to the Alchemix finance team before completing the transaction on August 5th. This incident is a significant event in the crypto world. It shows that even in the face of significant losses, there are mechanisms in place to recover stolen funds. The quick response from Alchemix and the other affected platforms demonstrates their commitments to their users and the security of their assets. The hackers' acceptance of the bug bounty offer also highlights a unique aspect of the crypto world. It shows that even those who exploit the system can be incentivized to correct their actions. From victories in the face of adversity to the ever-changing political landscape, the crypto world never ceases to amaze. So let's take a moment to examine where US presidential candidates stand on CBDCs. And remember to hit that notification bell to stay on top of all of these developments. And of course, this is our cover story for tonight. The leading US presidential candidates, irrespective of their party affiliations, seem to be in favor of a central bank digital currency. Both Joe Biden and Donald Trump currently lead in the 2024 presidential polls among their respective parties. Both expressed a favorable stance towards exploring CBDCs. This aligns with the conclusions drawn by Forbes earlier in 2023. Trump previously labeled Bitcoin a scam, while Biden's support for a 30% tax on Bitcoin mining has been interpreted as his stance on Bitcoin itself. The second-place candidates, Democratic candidate Robert F. Kennedy Jr. and Republican candidate Ron DeSantis, have been vocal about their support for cryptocurrency and their opposition to CBDCs. This is not an isolated stance within the Republican Party, as Vivek Ramaswamy is also seen as being pro-Bitcoin and anti-CBDC. Now, the most ardent crypto supporter on either side is Republican Miami Mayor Francis Suarez, who made his love for the technology known far before campaigning began. The political landscape is indicative of the future of CBDCs and cryptocurrencies in the United States. The support for CBDCs from leading presidential candidates could potentially shape the future of digital currencies in the country. On the other hand, the opposition from other candidates highlights the ongoing debate and the need for a balanced approach towards the adoption of digital currencies. So, what happened? In Russia, a significant legal move recognized digital currencies from other nations, setting the stage for the launch of their own digital ruble. However, Russian businesses show a lack of enthusiasm, indicating challenges ahead. Tether is pushing boundaries, introducing new software to boost Bitcoin mining efficiency. The BRICS nations eye a potential digital currency amid shifts in the global financial landscape. With the U.S. credit rating downgraded and a potential BRICS-SCO merge on the horizon, the doors might open for alternative currencies. The New York Attorney General's office set its sights on Genesis, marking another chapter in the narrative of regulatory scrutiny within the crypto industry. Alchemix celebrates a victory, recovering stolen funds from a recent hack. This incident serves as a reminder of the resilience of the crypto community and the importance of robust security measures. Lastly, U.S. presidential candidates revealed their stances on CBDCs, with leading contenders appearing to be supportive. The crypto landscape is set for some interesting times ahead, as political dynamics could heavily influence the future of digital currencies. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, then please like, follow, subscribe, leave a rating, or maybe a review. And in the meantime, we'll see you tomorrow night.